Today we're diving into one of the most powerful and life-changing books ever written for traders, Trading in the Zone by Mark Douglas. This isn't just another book about charts, indicators, or strategies. It's a book about the single factor that truly decides whether you succeed or fail in the markets: your mind. If you've ever felt the sting of hesitation just before placing a trade, the frustration of exiting too early, or the fear of watching your profits vanish, this book will speak directly to you. Because what Douglas teaches is simple but profound. Trading success doesn't come from predicting the future. It comes from mastering yourself. Throughout this journey, we'll explore how to let go of fear, how to release the need to always be right, and how to finally think in probabilities instead of certainties. By the end, you'll see the market not as an enemy to fight, but as a field of opportunities to play in, a place where clarity, confidence, and discipline guide every decision. Stay with me until the end of this summary, because what you'll discover here can transform not just your trading results, but the way you think about risk, uncertainty, and consistency in every area of your life. And before we begin, if you love learning from the world's most impactful books on success, wealth, mindset, productivity, and personal growth, make sure to subscribe to Audiobook 101. Here we bring you timeless wisdom, simplified and adapted for your growth. So let's begin our journey into the zone where trading stops being a struggle and starts becoming a path of freedom and mastery. The road to success: fundamentals, technicals, or mindset. When most people begin their trading journey, they immediately search for the magic formula that will make them rich. Some dive deep into fundamentals, studying company reports, earnings, and economic indicators. They believe if they can just understand the financial health of a company or the economy, they'll always know where prices are headed. Others turn to technical analysis, convinced that charts, candlesticks, and indicators hold the secret to predicting the market's next move. They spend countless hours testing systems, back-testing strategies, and searching for that one perfect signal that will never fail. Both approaches have their place, and both can be useful. But here's the uncomfortable truth: neither fundamentals nor technicals can guarantee success. Why? Because the real challenge in trading doesn't come from the market. It comes from within. Markets don't move because of formulas or patterns alone. They move because of people, and people are driven by emotions. Fear, greed, hope, and panic are what push prices up and down. You might know exactly what should happen, but when the time comes to act, hesitation, doubt, or fear can stop you in your tracks. This gap between what you know and what you do is where most traders fail. And this is why Mark Douglas insists that trading is not about mastering the market. It's about mastering your own mind. The most consistent winners are not the smartest or the most educated. They are the ones who think differently. They accept risk fully. They embrace uncertainty instead of fearing it. They act calmly when others panic. Where most traders see danger, they see opportunity, not because they're fearless, but because their beliefs align with the reality of the market. Real consistency in trading doesn't come from predicting the future. It comes from learning to think in probabilities, not certainties. Once you accept this, the market no longer feels like a threat. It becomes a playing field where you can execute with clarity, discipline, and confidence. This is the mental shift Douglas calls trading in the zone. It's not about forcing the market to bend to your will. It's about mastering yourself so you can flow with whatever the market presents. And once you do, everything changes. The lure and the dangers of trading. Trading is seductive. At first glance, it looks like the perfect path to freedom. No boss, no fixed hours, no rules telling you what to do. With just a computer screen and some capital, you can step into a world where every decision is yours. That promise of absolute freedom is what draws so many people to the markets. But here's the paradox. The very thing that makes trading attractive is also what makes it dangerous. Think about it. In life, most of us are raised under rules. At school, at work, in society, there are boundaries and structures. We are told what to do, when to do it, and how to behave. But when you step into the market, suddenly, there are no restrictions. Nobody tells you when to buy, when to sell, or how much to risk. That lack of structure unleashes emotions we don't even realize are inside us. Fear, greed, impatience, and even anger. Without discipline, these emotions can take control, and that's when traders self-destruct. Mark Douglas warns that trading without personal rules is like gambling without limits. In a casino, the game ends when your chips are gone. But in trading, you can keep playing as long as you have money in your account. And without structure, you risk losing it all. The freedom of trading also tempts us to resist discipline. Many traders know they should follow rules, but deep down, they avoid them. Why? Because rules feel like restrictions, but in truth, rules are not chains. They are shields. They don't confine you, they protect you. Then comes responsibility. In trading, every outcome is yours. You decide when to enter, when to exit, how much to risk. That level of responsibility is empowering, but it can also feel terrifying. Many traders escape it by following tips, copying others, or blaming the market when things go wrong. But the truth is, you cannot achieve consistency until you take full responsibility for every trade. And perhaps the most dangerous trap of all, random rewards. Sometimes, even a reckless trade makes money. That win creates a powerful illusion. Like a gambler chasing the rush of a jackpot, traders try to repeat that feeling even when logic says stop. Over time, this addiction to randomness destroys clarity and discipline. Finally, there is the illusion of control. In life, we often influence outcomes, adjusting plans, persuading people, changing circumstances. But the market doesn't care about our will. You cannot control it. The only thing you can control is yourself, your beliefs, your mindset, your actions. The moment you stop trying to master the market and instead master yourself, trading transforms. Trading offers ultimate freedom. But with that freedom comes the ultimate test. If you chase thrill, ego, or hope, the market will expose your weaknesses. But if you embrace discipline, responsibility, and self-control, trading becomes a path not just to financial success, but to personal mastery. Taking responsibility. At first glance, taking responsibility sounds simple. Of course, every trader believes they are responsible for their trades. But the truth is, most traders only take partial responsibility. They're happy to claim credit when a trade works, but when it fails, they quickly point fingers at the market, at their broker, at bad luck, even at news events. This subtle denial is one of the greatest barriers to consistent success. Mark Douglas emphasizes that becoming a trader isn't just about learning charts or strategies. It's about creating a new version of yourself. You are reshaping your beliefs, your habits, and your emotional responses. The foundation of that transformation is complete responsibility. Consistently profitable traders don't succeed because they have the best system or the smartest analysis. They succeed because they've built a mindset of discipline, They don't collapse after a loss, and they don't lose themselves in euphoria after a win. They remain steady, grounded, and neutral. When they lose, they don't rage or blame. When they win, they don't become reckless. Their stability comes from a mental framework that keeps them emotionally balanced. Many beginners actually start off with a natural flow. In the early days, before they've been scarred by big losses, trading feels exciting and effortless. But the first serious loss is the true test. If a trader hasn't truly accepted risk, that loss triggers deep pain. It may even awaken old wounds of failure or rejection. Instead of taking responsibility, the trader fights against reality, blaming the market or desperately trying to win back what was lost. But here's the truth. The market is neutral. It doesn't care how badly you want to succeed, how much effort you've put in, or how unfair your past might feel. It simply reflects opportunities. If you expect the market to validate you, soothe your pain, or make up for your disappointments, you will always end up frustrated. Blaming the market creates two problems. First, you start seeing it as an enemy instead of a playing field. Second, you distract yourself with endless searching for new strategies and shortcuts, not because you need them, but because you're avoiding responsibility. This fear-driven cycle leads to hesitation, impulsiveness, and repeated mistakes. Douglas identifies three types of traders. There are the consistent losers who never take responsibility and always blame external factors. There are the boom and busters who enjoy periods of success but eventually crash, repeating the cycle because they can't master their emotions. And finally, there are the consistent winners, the ones who fully own their process, who accept responsibility for every trade, and who use the market as a mirror to grow. Taking responsibility doesn't mean beating yourself up for every mistake. It means owning your actions, your mindset, and your reactions. It means realizing that no one else is in control, not the market, not other traders, not chance, only you. And when you fully embrace that truth, something shifts. The market stops feeling like a punishing force and becomes a neutral playground. You stop fighting against it and instead start learning from it. Responsibility becomes your key to freedom, because once you take full control of yourself, no external force can shake your consistency. Consistency, a state of mind. Every trader dreams of consistency. We imagine reaching that level where profits flow steadily, where losses are small and controlled, and where every decision feels clear. But for most, consistency remains a distant fantasy. Why? Because they search for it in the wrong place. Most traders believe consistency comes from finding the perfect system, the holy grail that never fails. They spend years testing indicators, refining strategies, and switching approaches. But Mark Douglas explains that true consistency doesn't come from a system. It comes from your mind. Think about casinos. They don't know the outcome of any single game, but they still make billions. Why? Because they think in probabilities. They have rules. They apply them with discipline, and they accept the randomness of individual outcomes. That's exactly what consistent traders do. Consistency is not about predicting the future. It's about being present in the moment, applying your edge, and letting probabilities play out over a series of trades. Each trade becomes just one event in a larger game. You no longer obsess over whether this particular trade will win or lose. Instead, you focus on executing well and letting the law of large numbers work in your favor. But here's the challenge. Most people resist this mindset because they carry the emotional baggage of needing to be right. From childhood, We're rewarded for correct answers and punished for mistakes. That conditioning creates fear, fear of loss, fear of failure, fear of being wrong. In trading, that fear is deadly. It clouds perception, fuels hesitation, and drives impulsive choices. To become consistent, you must reprogram your beliefs. You must accept risk fully so that a losing trade no longer feels painful. You must detach your identity from outcomes so that wins don't inflate your ego and losses don't damage your confidence. You must view every trade as just one of many, not a life or death event, but part of a long series where probabilities unfold. When consistency becomes your state of mind, everything changes. You stop fearing the market because you no longer demand certainty from it. You stop chasing perfection because you know it doesn't exist. You trade calmly, confidently, and without hesitation. Consistency is not about the market. It's about you. It's the result of a mindset where fear no longer controls you, where discipline guides you, and where probabilities are your foundation. Once you embrace this state of mind, consistency stops being a dream and becomes your natural way of trading. The dynamics of perception. One of the most fascinating truths about trading is that no two people see the market the same way. Put 10 traders in front of the same chart, and you'll get 10 different interpretations. Why? Because what we see is not the market itself, but the market filtered through our beliefs. Perception is not a mirror of reality. It's a lens shaped by our experiences, fears, desires, and expectations. If you believe the market is dangerous, you'll see threats everywhere. If you believe it's full of opportunity, you'll see setups others overlook. This is why two traders can look at the same price action. One sees a breakout, the other sees a trap. Mark Douglas explains that perception is shaped by energy, memory, and belief. The mind is constantly comparing new information with what it already knows. But here's the problem. The market is always new, always unique. When you cling to past experiences, your mind tries to force new information into old patterns, blinding you to what's really happening. For example, if your last trade ended in a painful loss, your mind might distort the very next setup. Instead of seeing it clearly, you hesitate, worrying the same thing will happen again. Or, if you just had a big win, you may suddenly see opportunities everywhere, over-trading and ignoring risk. In both cases, your perception is no longer objective. It's colored by emotion. This is why Douglas emphasizes emotional neutrality. When you strip away fear and greed, perception clears. You begin to see the market for what it is, not what you want it to be. And in that clarity lies opportunity. Think of the market as a vast ocean of possibilities. Most traders only see the waves created by their beliefs. But if you step back and quiet your emotions, you see the full horizon. You no longer force meaning into every tick. You observe with calm curiosity, knowing that the market itself has no agenda. It is simply presenting endless opportunities, waiting for you to act with discipline. The key to mastering perception is awareness. When you notice your emotions rising, pause. Ask yourself, am I seeing the market as it is, or am I seeing my fears and hopes reflected back at me? That small moment of awareness can shift everything. In the end, perception is the gateway to trading success. If you learn to clear the lens of fear, greed, and bias, you open yourself to the truth of the market. And when you see clearly, you act wisely. That is how perception becomes power. The market's perspective. If there is one thing every trader must understand, It is this: the market doesn't care about you. It doesn't care about your dreams, your fears, your goals, or your problems. It has no memory of your past wins or losses. It has no obligation to reward your effort. The market is completely neutral. Most traders, however, don't see it this way. They approach the market with personal expectations, as if it should somehow respond to their needs. They think, I've lost 3 times in a row, so this trade has to be a winner. Or, I've studied hard, I deserve a profit. But the market doesn't play by those rules. It doesn't owe you anything. Mark Douglas explains that the market's perspective is pure freedom. It will do whatever it wants, whenever it wants. Prices move because of countless forces: buyers, sellers, emotions, news, institutions, all interacting in unpredictable ways. From the market's point of view, every moment is unique. Nothing is fixed, nothing is certain, and anything can happen. If you expect the market to behave according to your rules, you set yourself up for frustration. You'll feel betrayed when it doesn't go your way, or you'll try to force it into patterns that don't exist. But once you accept the market's perspective, everything shifts. You stop demanding certainty, and you begin to flow with probabilities. This acceptance brings freedom. You no longer see losses as personal attacks, but as natural events in the game. You no longer see wins as validation, but as confirmation that your edge played out. You stop needing the market to prove you right, and you simply allow it to be what it is, an endless stream of opportunities. The real power comes when your beliefs align with the market's perspective, when you no longer resist uncertainty, when you no longer cling to being right, when you fully accept risk. The market stops feeling threatening. It becomes a mirror, reflecting your discipline back to you. From the market's perspective, there are no good trades or bad trades. There are only outcomes. It is your interpretation that gives them meaning. Change that interpretation, and you change your experience of trading itself. The market is neutral. The sooner you accept this truth, the sooner you release the emotional burden of trading. And in that release, you gain the clarity and confidence to trade like a professional. The trader's edge. Thinking in probabilities. What separates a professional trader from an amateur? It's not intelligence, and it's not even the system they use. It's the way they think. Professionals understand that trading is never about certainty. It's about probabilities. Every edge, no matter how strong, is nothing more than a probability. It does not guarantee success on any single trade. Just like a casino doesn't know the outcome of a single spin of the roulette wheel, but it knows the odds are tilted in its favor over thousands of spins. That's exactly how consistent traders think. Amateurs fall into the trap of believing they must be right on every trade. They measure their worth by single outcomes. If a trade wins, they feel smart. If a trade loses, they feel like failures. This emotional roller coaster drains them and clouds their judgment. But professionals think differently. They know that a losing trade is not a personal failure. It's just one outcome in a series. They don't get too excited about a win, and they don't get crushed by a loss. They stay balanced because they see each trade as part of a larger game, not as a verdict on their ability. Thinking in probabilities means accepting randomness. You may have 5 losing trades in a row, followed by a massive winner that more than makes up for them. Or you may win 10 times in a row, only to hit a streak of losses. None of this matters as long as you keep applying your edge with discipline. Over time, the probabilities play out. This mindset removes emotional pressure. When you stop expecting certainty, you stop feeling fear. When you accept that anything can happen, You no longer hesitate or second-guess yourself. You place the trade, manage your risk, and let the outcome unfold. Mark Douglas reminds us, your edge is not about predicting what will happen next. It's about stacking the odds in your favor and applying them consistently. Just as casinos don't fear a lucky gambler winning a jackpot, you shouldn't fear a losing trade. What matters is that you keep playing the game with discipline, because in the long run, the odds will work for you. Thinking in probabilities transforms trading from an emotional battle into a calm, consistent process. It frees you from the burden of being right, and it allows you to focus on what truly matters, executing your edge, trade after trade, with confidence. Working with your beliefs. At the heart of trading lies something deeper than charts or strategies, your beliefs. What you believe about yourself, about the market, and about risk will shape every decision you make. You may think you're trading based on logic, but in reality, your beliefs are silently guiding your actions. Mark Douglas explains that beliefs act like filters. They determine how you interpret information and how you respond to it. If you believe trading is dangerous, you'll hesitate and second-guess every move. If you believe you must always be right, you'll resist losses and let them grow bigger than they should. If you believe the market is an enemy, you'll constantly fight against it instead of flowing with it. The challenge is that many of these beliefs are unconscious. They are the result of years of conditioning, past experiences, and emotional scars. Some come from childhood, where mistakes were punished and success was rewarded. Others come from past trades, where big wins inflated your ego or painful losses shook your confidence. These beliefs get stored in your mind, waiting to surface every time you interact with the market. The key to transformation is awareness. You must start noticing the beliefs that drive your behavior. Do you avoid risk because of fear? Do you chase trades because of greed? Do you hesitate because you believe losses define you? Once you see these patterns, you can begin to replace them. Douglas suggests that trading requires a completely different belief system than everyday life. In daily life, certainty is rewarded. We plan, predict, and feel safe when things go as expected. But in trading, certainty doesn't exist. You must embrace uncertainty, accept randomness, and trust probabilities. This shift requires you to reprogram your mind with new beliefs that align with the reality of the market. Working with your beliefs is not about suppressing emotions. It's about reshaping your mental framework so that emotions lose their power over you. When you believe risk is natural, losses stop feeling threatening. When you believe each trade is just one of many, you stop attaching your identity to outcomes. When you believe the market is neutral, you stop taking its moves personally. The moment your beliefs align with reality, trading becomes lighter. You no longer fight yourself. You see clearly, act decisively, and stay calm under pressure. Beliefs are the foundation of your trading psychology. Change them, and you change everything. The nature of beliefs. Beliefs are not just thoughts we carry in our minds. They are powerful forces that shape how we see the world, how we feel, and how we act. In trading, beliefs are the invisible drivers behind every decision. Whether you take a trade, hesitate, or exit too soon, Mark Douglas explains that beliefs are formed through experience. Each time something happens to us, a win, a loss, a reward, or a punishment, the mind stores it, giving it meaning. Over time, these meanings harden into beliefs. And once a belief takes root, it resists change. It doesn't just sit quietly in the background. It pushes you to act in ways that confirm it. This is why two traders can look at the same market and see completely different opportunities. One might see danger and stay out, while the other sees a setup worth risking. The difference isn't in the chart, it's in their beliefs. Beliefs also have energy. They can dominate your perception even when you don't want them to. For example, if you've been hurt by losses in the past, you may believe trading is unsafe. That belief will trigger fear every time you try to enter a trade, no matter how strong the setup looks. Or, if you've enjoyed big wins before, you may believe you're invincible. That belief will tempt you into overtrading and ignoring risk. Here's the challenge. Beliefs feel absolute. Once we hold them, they feel like truth. But the market doesn't operate according to our personal truths. It follows its own reality. If your beliefs don't match that reality, you will suffer frustration, confusion, and emotional pain. The good news is, beliefs can be changed. They are not fixed forever. By becoming aware of them, questioning them, and replacing them with beliefs that align with the market's nature, you can reshape the way you trade. For example, instead of believing, "I must be right," you can adopt the belief, "I don't need to know what will happen next to make money." That one shift can free you from fear and hesitation. Understanding the nature of beliefs is the first step toward transformation. Because until you change what you believe, you cannot change how you perceive the market or how you behave within it. And once your beliefs match the truth of trading, consistency becomes possible. The impact of beliefs on trading. When I first began to understand how beliefs influence trading, I had no idea how powerful they truly were. At first, beliefs seem like harmless ideas, just thoughts we carry. But Mark Douglas reveals they are much more than that. Beliefs are energy. Once formed, they fight to stay alive. They shape how you see, how you feel, and how you act in the market, often without you even realizing it. Every belief carries a force of its own. Once it's in place, it resists change and demands expression. This is why traders repeat the same mistakes again and again, even when they know better. Their beliefs are silently pulling the strings, creating emotional responses that feel automatic. This explains why two traders can look at the same price chart and see two entirely different pictures. One sees opportunity, the other sees danger. The chart didn't change, their beliefs did. Beliefs don't just color perception, they also determine action. They can make you hesitate, make you panic, or tempt you to take reckless risks. If your beliefs align with the market's reality, you'll trade with clarity. You'll see opportunities without distortion, and you'll act with confidence. But if your beliefs are out of sync, for example, if you believe you must always be right or that the market must reward your effort, then every trade will be an emotional battle. Losses will feel personal, and wins will inflate your ego. Both extremes will keep you inconsistent. The truth is, the market doesn't respond to your beliefs. It responds to supply and demand, to buyers and sellers. But your beliefs determine how you interpret those movements and whether you can act with discipline. When your beliefs don't match the market's truth, trading becomes painful. You resist losses, you chase wins, you hesitate, you overreact. But when your beliefs match reality, that anything can happen, that losses are natural, and that probabilities are the only edge, the fear disappears. Trading becomes neutral, even effortless. Beliefs are the bridge between perception and action. Change your beliefs, and you change the way you see the market. Change the way you see, and you change the way you act. And in that shift lies the secret to trading in the zone. Thinking like a trader. So what does it really mean to think like a trader? Most people come into the market with the mindset they've been conditioned to use in everyday life. In school, in work, and in society, being right is rewarded and being wrong is punished. Mistakes bring shame, while accuracy brings praise. Naturally, we carry this conditioning into trading. But here's the problem. The market doesn't work that way. In trading, you can do everything right and still lose money. And you can make reckless choices and still stumble into a win. If you continue to think like an ordinary person, you'll keep fighting reality and you'll keep losing. To think like a trader, you must accept uncertainty. You must let go of the need to be right on every trade. Success in trading has nothing to do with predicting the future. It comes from aligning your actions with probabilities and from executing your edge over and over again. When you stop demanding certainty, you stop feeling fear. Instead of asking, "Will this trade work?" you begin asking, "Does this setup fit my edge?" If the answer is yes, you act. If it's no, you wait. No hesitation, no drama, no second guessing. Thinking like a trader also means detaching your identity from outcomes. A losing trade doesn't mean you're a failure. A winning trade doesn't mean you're a genius. Each outcome is just one result in a long series. Professionals don't measure themselves by single trades. They measure themselves by their consistency over time. When you finally make this shift, trading becomes lighter. You stop forcing trades. You stop chasing certainty. You no longer fear losses because you've accepted them as natural. You no longer cling to wins because you know they don't define you. You simply follow your plan, apply your edge, and let probabilities unfold. Thinking like a trader is not about predicting or controlling the market. It's about controlling yourself. It's about embracing uncertainty and aligning your beliefs with reality. When you do that, consistency stops being a struggle and becomes your natural way of being. The state of mind called the zone? Every trader dreams of reaching that mysterious place where trading feels effortless, where decisions flow naturally, and where fear seems to vanish. Mark Douglas calls this state the zone. It isn't fantasy. It's a very real state of mind that separates consistent winners from everyone else. When you are in the zone, your focus is razor sharp, yet relaxed. You're fully present, absorbed in the market's movement, but you feel no stress. You're not weighed down by memories of past losses or intoxicated by recent wins. You're not forcing trades or hesitating out of fear. Instead, your actions feel smooth, almost automatic, like a professional athlete in peak performance. Think of a runner lost in the rhythm of his stride, or a musician swept away by the flow of the music. In that moment, they are not thinking about mistakes or rewards. They are simply being. That is the zone. For traders, it's when you stop fighting the market and start flowing with it. But here's the paradox. You can't force your way into the zone. The harder you try, the further away it gets. Why? Because the zone emerges only when fear is gone, fear of being wrong, fear of losing, fear of missing out. These emotions pull you out of alignment. The only way to enter the zone is to accept risk completely. The moment you stop fearing losses, you free your mind. A losing trade no longer feels like a threat, just another outcome in the game. And once that fear disappears, your perception clears, hesitation fades, and you begin to act with confidence and ease. In the zone, every trade is just an opportunity to apply your edge. Wins don't make you reckless. Losses don't make you afraid. You stop measuring yourself by single outcomes. You are emotionally neutral, but mentally sharp. That balance is what allows you to see opportunities others miss and to act without hesitation when the time is right. The zone isn't about perfection. It's about alignment. Alignment between your beliefs and the market's truth. Alignment between acceptance of risk and freedom from fear. When you reach this state, trading becomes less of a struggle and more of a flow. And in that flow lies the consistency every trader seeks. The 3 stages of development. Every trader's journey is a process of growth. Mark Douglas describes it as 3 distinct stages, and each stage reflects not how much you know about the market, but how much you've transformed your mindset. The first is the beginner's stage. In this stage, everything feels fresh and exciting. The beginner is full of energy, eager to learn, and often chasing the thrill of quick profits. Sometimes they even experience early success, which creates the dangerous illusion that trading is easy. But this illusion never lasts. Losses eventually arrive, and with them comes fear, doubt, and the painful realization that the market is far more complex than it seemed. The second is the struggle stage. This is where most traders get stuck. They've learned enough to know the market is uncertain, but they haven't yet learned how to master themselves. In this stage, emotions take over. Traders hop from one system to another, searching for the perfect strategy. They hesitate when they should act impulsively when they should wait, and constantly battle regret. Some make money for a while, but then give it back because they can't stay consistent. For many, this stage drags on for years, a cycle of frustration and hope. The third is the professional stage. This is the breakthrough. Here a trader has reshaped their beliefs to align with the reality of the market. They fully accept risk, think in probabilities, and act with calm discipline. They no longer chase certainty, and they no longer take losses personally. Wins don't inflate their ego, and losses don't wound their confidence. Every trade is simply another opportunity to apply their edge. Money stops being the obsession. Mastery becomes the focus. And ironically, once money is no longer the obsession, it flows more steadily than ever before. Most traders dream of skipping straight to the professional stage, but there are no shortcuts. You must walk through the struggle, face your fears, and let go of illusions. The transformation is not about finding better strategies. It's about becoming a different version of yourself. Once you reach the professional stage, trading no longer feels like chaos. It becomes calm, steady, and even enjoyable. The market is no longer your opponent. Your only opponent is your own discipline. The 5 fundamental truths of trading. Mark Douglas says that if you want to transform your trading forever, you must accept 5 simple but powerful truths. They may sound basic at first, but when they sink in, they dissolve fear, remove hesitation, and unlock the consistency every trader dreams of. The first truth is that anything can happen. No matter how good your analysis looks, no matter how strong the setup, the market can move in any direction at any time. Accept this, and you stop demanding certainty. Instead of expecting to be right, you prepare for all possibilities. The second truth is that you don't need to know what will happen next to make money. Most traders believe success depends on predicting the future, but professionals know prediction is not necessary. All you need is an edge, a strategy that gives you a slight probability advantage. Apply it with discipline, and profits will follow over time. The third truth is that wins and losses are randomly distributed. Even if your system is profitable, you can't know which particular trade will win and which will lose. Your edge may work over a series of 100 trades, but in the short term, anything can happen. This is why risk management and emotional control are vital. The fourth truth is that your edge is nothing more than a probability. It doesn't guarantee success on every trade. It only tilts the odds in your favor. Just as a casino doesn't fear a lucky gambler winning a hand, you shouldn't fear a losing trade. The edge pays off only through consistent application. And the fifth truth: every moment in the market is unique. Even if a chart looks identical to a past setup, the underlying conditions are always different. New participants, new orders, new emotions. This means no trade is ever certain. Each one is simply another opportunity where your edge may or may not play out. When these truths become part of your belief system, everything changes. Fear fades because you no longer expect the impossible. Hesitation disappears because you know outcomes don't define you. Overconfidence melts away because you respect randomness. The market stops being a source of stress and becomes a neutral environment where you calmly apply your edge. The 5 fundamental truths are not just ideas to memorize. They are beliefs to internalize. When they live inside you, trading stops being a desperate fight for control and becomes a game of clarity, confidence, and freedom. Setting up the exercise. Understanding trading psychology is powerful, but Mark Douglas doesn't want you to stop at theory. To truly rewire your mind, you must practice. That's where this exercise comes in. It's designed to train your brain to act with discipline, to trust your edge, and to let go of fear. Think of it like a workout for your trading mind. Just as athletes repeat drills until movements become second nature, you'll use this exercise to make disciplined trading automatic. Here's how it works. First, define your setup with absolute clarity. No guessing, no maybe. If the market shows your setup, you take the trade. If it doesn't, you stay out. This step removes hesitation and forces you to act only on your edge. Second, place your stop loss where the market itself tells you, beyond a logical level, like a recent high or low. Don't place it out of fear, and don't move it out of hope. Let the market structure decide. Third, stay consistent with your chosen time frame. If you enter on a 15-minute chart, manage and exit on that same chart. Don't jump to other time frames seeking reassurance. Consistency creates confidence. Fourth, trade with the flow. If the trend is up, focus on buying pullbacks. If the trend is down, focus on selling rallies. Don't fight the market. Move with it. Fifth, scale out of your trades in parts. Don't exit all at once. Take some profit as the market moves in your favor, while leaving part of the position to capture bigger moves. This reduces pressure and keeps you balanced. Finally, repeat this exercise again and again. The goal isn't just to make money while practicing. The real purpose is to train your mind to think in probabilities, to act without fear, and to see every trade as just one event in a long series. At first, it may feel mechanical, but with time, it becomes natural. Your mind grows calmer, your actions become sharper, and eventually, trading feels less like a battle and more like a flow. This exercise is not about chasing perfection. It's about building habits of consistency. The more you practice, the more your mind aligns with the truth of the market. And when that alignment happens, you step into the zone. Conclusion. As we come to the end of trading in the zone, one truth stands above all others. The real battle in trading is not against the market, it is against yourself. Charts, systems, and indicators may guide you, but without the right mindset, they are useless. The market is neutral. It doesn't know who you are, and it doesn't care about your wins or losses. It simply reflects the collective actions of buyers and sellers. The only thing you can control is yourself, your beliefs, your discipline, your ability to act without fear. Mark Douglas shows us that consistency does not come from prediction. It comes from aligning your mind with reality, that anything can happen, that losses are natural, and that your edge is only a probability. When you fully accept this, trading stops feeling threatening. Losses no longer wound you, and wins no longer inflate you. You begin to trade with calm confidence, focused only on execution, not on outcome. This book is not just about trading, it's about transformation. It challenges you to let go of limiting beliefs, to embrace uncertainty, and to step into a mindset of freedom. The lessons here are not quick fixes. They are lifelong tools for growth. So remember, your greatest opponent is never the market. It is always your own fear, hesitation, and ego. Once you master yourself, the market becomes an open field of opportunity. And in that mastery lies the consistency every trader dreams of. If you enjoyed this audiobook summary, make sure to subscribe to Audiobook 101. Here we bring you the world's best books on success, wealth, mindset, productivity, and personal growth, simplified and adapted so you can apply their lessons to your own life. Stay with us, because every week we share wisdom that can change the way you think, trade, and live.